Hello everybody and welcome to my monthly Vietnam update. March was certainly another eventful month. Silicon Valley Bank's collapse and Credit Suisse's forced sale has put financial markets in the worst state of panic since the global financial crisis of 2008. But given that Vietnamese banks are more traditional in nature and mainly focusing on the domestic economy, the Vietnamese stock market was less affected. The VN index closed the month plus 3.9% and the NAV of the AFC Vietnam Fund was plus 1.8% in March according to internal estimates. Hi, my name is Andreas Vogelsanger. I'm the CEO of the AFC Vietnam Fund. Don't forget to subscribe to our YouTube channel and switch on the bell so you don't miss any uploads. The collapse of US-based Silicon Valley Bank, the biggest failure since the global financial crisis, and the emergency rescue of Credit Suisse by Swiss rival UBS sparked a sell-off in mainly European and US banking stocks as contagion fears spread. This is why the Federal Reserve had to pump around $300 billion into the US banking system in order to calm the market. But also the Swiss government pledged to make as much as 109 billion Swiss francs available, and the Swiss National Bank backed this forced takeover of Credit Suisse with a guarantee of 100 billion Swiss francs. The combined sum of 209 billion Swiss francs is equivalent to around a quarter of Switzerland's gross domestic product. The impact on Vietnam's banking system is quite limited, given that its banks are less connected in terms of investments to US and European banks. And also, Vietnamese banks are much more conservative than their European and US peers, as they are still focused on their very traditional banking services, such as attracting deposits from their customers and then lending these funds out to their customers in form of loans and mortgages. But the noise on social media and the press about the fear of another banking crisis similar to 2008 also influenced investors in Vietnam, where the stock market is mainly driven by domestic retail investors. The VN index therefore weakened around mid of March, but managed to recover after the decisive actions by the Fed and the Swiss National Bank and closed the month in positive territory with plus 3.9%. The root cause of this current banking crisis is the fight against inflation by the various central banks around the world. Global short-term interests were too low for too long and are now increasing at a rapid pace to bring inflation back under control. The Fed, for example, increased interest rates 9 times over the last 12 months from 0% to 4.75%. Given that a lot of money was injected into the banking system during the recent pandemic, banks invested some of these funds in bonds when the interest rates were still lower and are now sitting on sizable unrealized losses given that interest rates went up so much. Let's talk a little bit about Vietnamese interest rates. On 16th of March this year, the State Bank of Vietnam, or SBV in short, unexpectedly lowered its discount rate from 4.5% to 3.5% and lending rate from 5% to 4% in order to support certain businesses, especially in the small and medium-sized segments. And in a surprise move on the last day of the month, on 31st of March 2023, the SBV announced that it will also reduce its refinancing rate to 5.5% from 6% effective 3rd of April 2023. A reduction in the refinancing rate will help banks get cheaper loans from central bank, which in turn can lower their lending interest rates to businesses. The SBV announced that inflation in Vietnam already eased in February, and they believed that the Fed will soon halt its rate hiking cycle, which would reduce pressure on the Vietnamese dong. At the same time, the SBV also pumped more than the then 2.2 billion equivalent in Vietnamese dong, 2.2 billion US dollar, which is around 52 trillion Vietnamese dong to be precise, into its banking system. This action helped to ease liquidity, or the liquidity crunch, of the last few months, which further brought down overnight interbank rates from 8.4% in October 2022 to around 1% in March 2023. Also, the yield of the 10-year Vietnamese government bond dropped from around 5.2% to below 4% in the last few months. As the SPV balances economic growth while ensuring stability, there will be an increasing bias to shift towards a more accommodating stance ahead. We therefore believe that the SPV will probably announce a further interest rate cut at the end of next quarter of this year. The Chinese government has decided to add Vietnam as of 15th of March 2023 onto the list of countries to which China's group tours can be conducted. On this news, Vietnamese carriers started the race to resume direct routes to China, given that flight tickets are in high demand. It is expected that Vietnam's target of welcoming 8 million international tourists for this year will soon be achieved. When we look back at 2019, the year before the onset of the pandemic, 11 Chinese and 3 Vietnamese airlines carried nearly 8 million passengers between the two countries, with the latter accounting for 4.6 million passengers. According to a survey done in 2019 by the General Department of Tourism, Chinese tourists spent an average of $1,022 per trip, higher than some other markets such as Japan, Korea, and Southeast Asian countries. With this level of spending, revenues from Chinese tourists reached about 5.9 billion US dollar in 2019, accounting for 18% of Vietnam's total tourist revenues. Chinese tourists mainly visit the central region of Vietnam and prefer sport activities and entertainment by the sea. It is therefore expected that Nha Trang alone will receive 1 million Chinese travelers in the summer months from March to October. According to General Statistics Office of Vietnam, international tourist arrivals in the first quarter of this year reached 2.7 million visitors, which is around 60% of pre-pandemic levels in the first quarter of 2019. A recovery of tourism in Vietnam will of course provide an important contribution to the GDP growth. So let's talk about corruption, the Corruption Perception Index, and political stability in Vietnam. Over the last few months, we had quite a few calls from investors, and some of them even visited us in Vietnam to find out about the current state of the economy and political environment and its outlook. Many of them were concerned with the extent of the ongoing anti-corruption campaign and the political stability of Vietnam in view of recent political changes with the dismissal of the Vietnamese president and 2 vice prime ministers a few months ago. We of course follow the political situation in Vietnam very closely, and we believe that the political reshuffling in the anti-corruption campaigns are very beneficial and necessary in the future economic and political development of Vietnam. In terms of stability, Vietnam, unlike most Western countries, is a socialist republic with a one-party system. Vietnam has gradually shifted from a centrally planned to a market economy and has transformed the country from one of the poorest in the world into a lower middle income country. Vietnam is now one of the most dynamic emerging countries in the Southeast Asian region. The advantage of this one-party system is that most policies are kept stable throughout the years and rarely change. Key positions of the countries, such as the president or the prime minister, who are elected for a 5-year term by the parliament, are only executives who manage and lead the country based on the Communist Party and policies. Even if they would be dismissed and replaced before the end of their term, policies and political agenda will remain the same unless voted otherwise by the parliament. According to Transparency International, Vietnam's global corruption perception ranking improved from position 104 in 2020 to 77 end of 2022, overtaking countries such as India, Indonesia and Thailand. This is certainly a remarkable improvement after a few years of anti-corruption campaigns and will form an important ingredient in Vietnam's long-term success story. Over the past 2 decades, Vietnam has become a top destination for investments in manufacturing due to its strategic location and advantages in shipping, competitive labor and production costs. Compared to other Southeast Asian countries, Vietnam stands out with an international airports, seaports and rail links facilitating production flow and transportation. But Vietnam also successfully managed to attract more and more high-tech multinational corporations such as Samsung, LG Electronics and Apple, to just name a few. According to the World Bank, manufacturing contributed nearly 25% of the nation's GDP in 2021, up from around 17% in 2010. It also looks very likely that this trend will continue. Well, this is all for me for now. Thank you very much for listening, and you're gonna hear from me again next month with another hopefully interesting Vietnam update. Thank you and goodbye.